So, welcome guys to the case studies open session. Welcome to those who are following us on social media. Um, Two cases today, cases that we analyzed a couple of, one 6 months ago, one more than a year ago, but they're very, very relevant to today's trading environment. And I picked up two easy and um, not very complicated cases because we're gonna go from easy to more complicated cases down the week, and 6 more cases which are completely new next week. So we have plenty of um, analysis ahead, and we have earnings season, and this is going to help. I'm sure it's going to help many traders with their um, trading strategies, because this is all about trading strategies. Guys, if anybody will need the recording, here's Clifton and his email. Again, just email Clifton tomorrow morning. Like I said, we should go and be here in this class until 5:30. So we're going to go without any breaks. And what we won't be able to accomplish today, we will continue tomorrow. And we have another session Wednesday, and then Thursday, you have the mentoring with Amir um, as well. Okay, so I'm ready. Our trading event is going to be dealing with analyzing the intraday price action following the earnings report of June 19, a year ago, in Adobe. Again, earnings report. Why an earnings report? Because it doesn't matter if the news are the type of news that Tesla created today, which was because the stock is being added to the S&P 500. That was intraday news. Earnings news are coming always in the US before the market opens or after the market closes. We have today IBM. We're not gonna talk about IBM right now, but I can bet that there will be 10% to 20% of the earnings reports, especially in large caps, are going to be mimicking the price action of Adobe. I mean, this is the case from a year ago. It's still very much relevant. The second case is going to be about the small cap, which is also an important part of not for many traders, but for some traders, especially those who start those who have the intro accounts, the student accounts that cannot afford them to buy the big names, the big cap names, but can easily find good trades amongst the small caps from time to time. So we're going to deal with Adobe. Now, what is Adobe, and what are the important sector that Adobe takes part of? All this data, guys, you don't need me for that. You go to ETF.com and you just type in ETFs that have Adobe as their component, and you get a list of 227 ETFs and 40 million shares, or nearly 40 million shares of the Adobe float is traded by those ETFs. The largest holder is the Qs, as you can see. So this is a very important stock for the Nasdaq. It's a very important software company. We don't pay attention that much to the software sector per se, because the definition is not very clear to many, and there is no like a leading software ETF. Okay, there is no leading software ETF that we trade. We trade the Qs. Nevertheless, if you're looking for a benchmark for ADB, you can have either the Qs I use always the SPY, but it can be both. So Adobe, it's an important company for the Nasdaq. Trades 40 million shares in ETF, which is a nice number. 227 ETFs are following and buying and selling this company. Okay, now let's try to understand how strong or weak is Adobe versus the S&P 500 coming into the earnings report of June 2016. If we go back 4 years, 4.5 years to 2015, you can see a huge winner. The stock pretty much trends higher 5 years with maybe one pullback that was late 2018. That was this pullback that you can see here on the chart. It's because of the U.S.-China trade agreement that unraveled late 2018. But pretty much, if you look at the price action in Adobe, it's staggering. The stock just keeps moving up for years in a row, and by the middle of 2019, it's up 400% versus 4 years back. That's amazing. The relationship to the SPY is clear. The SPY is up 20%. Okay, sorry, it's 20. It's 20. Or, yeah, it's 20, maybe 25% over the same period. So the SPY is up in 4 years 20%. Adobe is up in the same period 400%. It's clear that we're dealing here with a winner. It's clear that this company, Adobe System, is a winner on any time frame, unless you go back maybe, I don't know, 10 years. We're not looking back 10 years. We could care less about 5 years either. We just want to see and spend 2 minutes on this chart just to understand what Adobe is all about. Yeah, again, it's not important. We want to see the relationship, Charbel. We want to see is this a strong versus the market type of stock or weaker than the market? Just to get a feeling of what's going to happen coming into the earnings report. I mean, if you have a loser coming into the earnings report, you expect a move down. If you have a winner, you expect a move up. Okay, it doesn't necessarily mean that you're going to have a move up or move down in case of a loser, but those are the expectations because, again, millions of shares are traded into the earnings report, and if the stock is heading lower, of course the expectations are not for a good earnings report. Okay, if the expectations were for a good earnings report, the price action would have been different. Anyway, for the first 6 months of 2019, both the SPY and both Adobe are looking strong. Adobe is pointing up, the SPY is pointing up. Everything is dandy. Everything is great, leading into mid 2019. Okay, and this is how we look, guys. This is a different format that you normally see. This is the old type of format that we used to present with case studies a year ago. So it's a little bit different. We have, of course, an improved format, but if you want to see a chart that intraday charts from a year ago, that's the only way to go about them. We cannot get at this point intraday charts from a year ago. Okay, so that's a complicated thing, costs a lot of money, and it's not available at this point. Anyway, so you can see, guys, the first on the left, the chart of Adobe, and the gap up with a huge volume, and this is the price action okay, in the first 30 minutes. And on the right chart, you'll see only the price action in the first 30 minutes in 2-minute bars. So basically, you see the same, a gap up and after a pullback in the first 10 minutes, a move higher towards the highs of the day. Now, how did Adobe do in the last earnings? I don't know. Just go back a month, Shafkat, and you'll see the price action in Adobe. But it's not really important because we can look up and deal with that a bit later. Right now, the important thing is to see the difference between watching the price action early in the morning in 5-minute charts to 2-minute charts. Okay, and the reason why I watch and prefer, especially in the morning, a better or looking at the 2-minute bars chart is that I can see better the intraday price action. If you are a breakout type of trader, it doesn't really matter. If you buy only the breakouts, okay, many people I know that are following Scott, he likes to trade the breakouts. Indeed, it doesn't matter if you buy the breakout, if you trade the 2-minute or the 5-minute, but if you're focusing a bit on the 2-minute, you can see this triangle reversal building up in ADB, okay? So you can see this, the lows of the day, the triangle, this consolidation and the leg up, and that's all that before breaking over the highs of the day. So if we're looking at discussion points at this time of day, meaning between 9:30 and 10, we have a gap up and go situation. Is this a gap up and go situation? We have to understand the stock direction, and finally the entry points and the risk on the trade. If we can find entry points, and if we can find entry points, can we deal with the risk on the trade? Stock direction, of course, is very important to us, and sometimes we do have a stock trade direction. And the gap up and go, is this a gap up and go situation? This is what we need to discuss right now. So let's after watching this chart, and guys, try to memorize this chart. Okay, so again, we're looking at a stock that gaps up, pulls somewhat. Of course, it's not moving into closing the gap, and it's moving higher towards the highs of the day. So obviously, if the question is this a gap up and go, or a gap up and close, or a trending lower, the question is at anywhere between 9:30 and 10, the trend is higher. Okay, so that's definitely a gap up and go situation. So if you, what are the technical features of this opening day setup in ADB? It fits the strategy where a stock gaps up and continues higher. This is what we like to see. We don't like to see the scenario that happened today, for example, in Moderna, where the stock gaps up, or the stock that the scenario that happened today in Pfizer or in AZN, where the stock gaps up a bunch and then sells off. Because on stocks that are gapping up a lot, they automatically pop on our watch list. And we're looking for long trades on strong stocks, and short trades on weak stocks. Now, if a strong stock is turning lower and trades lower, is it a strong stock or a weak stock? That's the main question. And when it's a strong stock and when it is a weak stock. But if we have a gap up and go situation, then the answer is clear. It's a strong stock moving higher. We have no question mark regarding the trade direction. It's already a plus. So what are the basic technical features? Gap up and go plus triangle reversal, a triangle breakout, short into closing the gap, or it's too early to decide. Now let's eliminate. Okay, short into closing the gap, it's not possible because obviously, obviously the stock is moving higher. Okay, and it's not a triangle breakout. Okay, it's not a triangle breakout because let's face it, the breakout is not showing any triangle. This is a triangle. You can see it here pictured on the chart. And this is a reversal play. It's not a trade at the highs of the day. Therefore, it's a triangle reversal. So if it is a triangle reversal, it's obviously not a trade at the highs of the day. And regarding too early to decide, now is 10 a.m. too early to decide? Sometimes it is. In this case, okay, on stocks that can work from 9:30 to 4 p.m. We talked about many times in the past. We want to get on board trades fast, but not at all costs. If we see a technical entry, if we can estimate the risk on the trade, then we decide if you take the trade or not. Okay, so it's not too early to decide. Why is it not early to decide? Because we already see the price action by 10. We already see on the way up or analyze an entry point. That's this horizontal blue line, and we have a triangle breakout at the reversal, which is met by a very good volume. Guys, look at the volume, okay, over the move of the blue line. So it's not only us that are seeing this type of price action. It's also the algo and of course other traders. So D is not an option. In this case, let's go with Charbel's answer. Um, A. A is the right answer. It's a gap up and go. It's a triangle reversal. If anybody thinks or sees a different answer, please step up right now, or we move to the second question of the question and analysis part of this case. Everybody is okay with this very, very simple setup. Okay, it's a very simple setup. It's a gap up and go. It's not moving sideways. We see lower highs. We can see the higher lows. Okay, higher lows on the leg up. Okay, you can see low, higher low, higher low, higher low, higher low. Maybe there's a breach here, but overall it's a higher low situations into the triangle breakout. Clear, guys? Can I continue? Yeah, and again, the breakout over the blue line, which is very important, okay? Look at this, 950, 950 or 952, a big green bar accompanied by very good volume. And this is on the breach of the blue line, okay? This is on the breach of the blue line, meaning exactly at the power entry it works. So that's pretty much what was important today. Now, let me show you something today from the trading day today, which is similar, although it's not exactly the same. Take a look at this. This technical pattern over 388.20, and look at this accompanying volume bar, which was at that point the best volume bar all day. Okay, you can see the best volume bar all day is the breakout bar. Okay, so if the breakout bar is a very, very strong volume bar and the price action accompanying it is good enough, now you have a trade on your hands. Keep in mind that the time was 11:30 and Apple, other than one pullback, traded higher for 4 hours, almost 5 hours, sorry, 4.5 hours. Yeah, sorry, it was 11 until 4 p.m., 5 hours. So Apple gained other than one pullback for 5 hours in a row. So this is how good this entry point was. And this is how we all manage. I mean, I'm sure that nobody survived the pullback, and nobody also bought Apple later. And obviously, a $5 trade was wasted here. So instead of taking $5 off the table, I took maybe $1.50, meaning I lost 300 shares times almost $4, $1,200 left on the table on this trade in Apple. Again, and the timing is 11. Now we go back to our example. The timing now is already 10 a.m. Okay, the timing is 10 a.m. Okay, so 10 a.m. until 4 p.m., 6 hours. This is also a 200, nearly $300 stock, Adobe, in 2019. So it's a huge mover. Okay, it's a big mover. The expectations are for multiple points on this trade. Again, if you look at the daily chart, the stock is coming into this earnings report at 280. So it's a big mover. Everybody's okay with the questions and analysis? Very, very simple, basic, gap up and go, continuation, early entry. We're looking for the technical setup. So far, so good. And we get it. We're getting it. Okay, now things are getting a bit complicated. First of all, now it's 10:30. Okay, so we did have the breakout over the blue line, a leg up, which pretty much was for about 2, 4, 6, less than 10 minutes. Then a reversal towards the VWAP area. Now, again, if you are a trader here, okay, and this case is not about managing intraday position, it's more like a theoretical case, but we have a problem because on one hand, we're looking for Adobe to be a multiple points winner. On the other hand, it's coming back to the entry. And if a big mover is coming back to the entry, most of the time, our stop loss is going to be in the entry. Sometimes we are taking a partial, sometimes we're not taking the partial, but most of the time, the stop loss is going to be at the entry. We're not going to keep the stop loss, in this case, more than $1.20 or $1.40 down in the money to the support level. In this case, the VWAP area maybe even below. So in this case, the pullback is a problematic one. Okay, having said that, we still have to deal with the discussion point. Is it a gap up and go at this point? Do we control the stock direction? Okay, what is the stock direction at 10:30? Do we see additional entry points on the trade and the associated risk with them? So if we have to ask ourselves, what is the trend now at 10:30? The trend is still higher, but we're going to a pullback. Okay, so now the question is, how deep is this pullback? The pullback is to the VWAP area, maybe to the lows of the day, maybe there's going to be a V-shaped turnaround from the VWAP area. So it's really not clear at this point, but the only thing that's clear is that the initial move or the initial breakout failed. Okay, this is not what we expected from Adobe. Maybe we took a partial, maybe we didn't, okay? Depends on the strategy, but it's not a stock that's only trending higher. And the V-shape from the highs is problematic because many day traders use the entry, the breakout level or the reversal level as their stop loss. And now it's under our entry point. So right now, you are negative at 10:30, you are negative, losing money on Adobe unless you stopped out. And that's, of course, not something that we want to trade at this point. So is it still a gap up and go? If I'm looking at the chart, it's still a gap up. Okay, is it a go? We'll have to wait for more. Okay, stock direction. If it breaks under the V report, and of course, if it breaks under the lows of the day, the stock direction is obviously not higher anymore. Now it's interesting to see what's going to happen to the stock direction, because right now we lost the clear uptrend. We have a new entry point. It's hard to see it, even if we have right now at 10:30. It's very hard to see a new entry point, as much as the risk is maybe to the viewer. Okay, so this is how we look at 9:30 to 10:30. A failed reversal play. Of course, the breakout trade would have been a major failure. Okay, though, so it didn't meet the standards of a breakout trade, but the reversal trade was very nice, and a pullback. Okay, guys, now 60 minutes into the trading day. What are the technical features of ADB? The trend is not clear anymore at this point. There's no visible pattern, therefore no new entry point. The risk is not clear. And of course, in this case, all of the above. Yeah, it's not really clear what's going on. Okay, at 10 in the morning, everything was clear. 10:30, we have a blur vision about the next trade in ADB. Anybody here sees a short trade in ADB? And if so, why? Keep in mind, it's a gap up. Nobody wants to initiate a sell-off in the stock. Okay, that's a good thing. This is a gap up. Okay, on a gap up and go situation, we don't look to short. We look to buy cheap. That's our strategy. So we want to buy a pullback. We don't want to buy the breakout. If there's a breakout trade, fine, we may join. But the idea here is to buy the pullback, and what's going on now is a pullback. The question is, of course, with a pullback, is the pullback the type of a pullback where the stock really reverses higher, or changes trend like CSIQ did to us today. So CSIQ looked great for a reversal trade, and still dropped another 50 cents. By that time, the trend was not higher anymore. I don't know where it ended up at the close. Never mind. Anyway, this is how we look after 60 minutes. So I agree with anybody here that says D, and the reason for that, the trend is not really clear anymore, and we don't have any technical feature. Okay, as much as we had a triangle breakout or triangle reversal early on, now we don't have anything. Okay, no pattern and no new entry points. The risk, of course, is not clear anymore because we don't have a clear entry point. And why do we need to push ourselves into new trades? First of all, we can wait with ADB. There's still plenty of time left on the table, like 5.5 hours. Lots of things can happen in 5.5 hours in a stock like Adobe. I don't know if the sellers are running out and buyers are coming in. We'll see about that later. Of course, it's a gap up and go, so the buyers are in control. Okay, The buyers are in control. There's obviously lots of strength in this stock, and a sell-off point should not be a problem, unless it turns into an avalanche. Okay, so guess what? It's not turning into an avalanche. This is how we look, guys, at 11. This is how we look at 11. So the stock had the Adobe had support under the VWAP. You can see that the support level was very, very clear. And then another leg up. It's now creating another leg up towards the highs of the day and creating a bull flag under the highs of the day. So right now, wow, we're looking much better. First of all, we have a trend. We have an entry point. We have a stop loss. We have a stock direction. We have everything. Right now, we have the breakout trade, which is long over the blue line, and this is our risk, clear. Okay, this dot on the triangle breakout is our risk, and we have the entry point, the blue line, the stop loss, the trend, the gap up and go. We can answer. The discussion points are clear for everybody to see. Question, guys, about this setup, which is a very, very unusual one. A pullback back to the VWAP area, successful reversal again, and we're back to the highs of the day. That's 11. Keep in mind that 11, there are still 5 hours of trading. So there's plenty of time for leg to the upside. Question, guys, anything or everything is clear? Entry points are clear, risk is clear. Again, we're not going to deal with numbers. It's a theoretical case, but it doesn't matter if the entry is 30 or 35 or 300. The concept is for you to see the support level, how to manage the trade, how to take advantage of support if you can. And if it works, so be it. This is actually trying to trade higher from support. I tried one trade today, trading higher from support, and failed with it. It doesn't work 100% of the time. That's, of course, important to say. Again, sometimes if the support level is $3, let's say you're looking at the trade now at 280, and the support level is 277. Okay, and this consolidation bull flag is $1. You cannot use the real support level because in this case the risk reward on the trade is no longer great. You don't want to take a $3 stop loss if you don't have another option. If you do have another option, why deal with that? Okay, so assuming the risk on the bull flag is, let's say, $1, and the risk on the support level, the blue line, the lower blue line is $3. There's no question that most of the traders will prefer to trade it with a $1 stop loss rather than 3 times as much. We try as much as we can not to volunteer more risk. We want to cut on the risk and trade with less risk versus more risk. That's why I decided when on the trade on the Moderna today to take a very, very small position because the stop loss was $1.40. So I shorted only 400 shares because the risk on that trade was $600. Let's face it. With the slippage and everything, it would have been $600. It's not very easy to lose $600 on a trade. And you know that a $1 stop loss in Moderna is not a big stop loss. Let's face it. Okay, it's such a volatile stock. So this is why you analyze support, you analyze the risk, you analyze the entry point. You do everything in your power not to enter the trade that doesn't fit your your strategy. And at one point, that stock Moderna was against us like 50 cents. At the end, it was a $2 winner. Gerhard, have a great afternoon. See you tomorrow. Yeah, we always check the SPY. That's very important. Shafkat, very important. We always check the SPY. Okay, now assuming, okay, assuming the time now is 11 in the morning and the SPY is sharply higher. That's perfect for us. We're going to take this trade, no question asked. Or even if the SPY is flat. But if the SPY is sharply lower, is Adobe a long trade? And why are you watching if the SPY sharply lower long trades? That's my next question. So if the market is sharply lower, nobody's trading Adobe. Probably it's not going to work as good with less people participating. Again, that's pretty much the concept of the market moving lower, less people moving into long trades. So I would have said that no way this, in this case, the market is moving lower. And maybe it's not moving higher, okay? But it's not moving lower, but definitely not sharply lower. Okay, guys, question analysis number 3. We analyzed the chart at 11. Is it safe to say that the trend is clear, breakout over highs, the next possible trade? This one looks interesting and okay, probably. Gap up and go plus cup and handle breakout at highs, the next possible trade. Let's take a look. Yeah, it actually looks like a cup that's closing here, a pullback to the lows of the handle, and the breakout coming up of the handle. So gap up and go plus cup and handle breakout at highs, that's very, very possible. Bull flag under daily highs is a potential long trade pattern as well. All of the above. Yeah, again, all of the above because really we have the bull flag under the daily highs. You can see this consolidation. We have the cup and handle formation. We have everything. Okay, D is the right answer. Hope everybody is on board with that. Anybody objects to D for whatever reason? Nobody objects. If nobody objects, I can continue. If you object, guys, this is the time. Okay, I'm sure that nobody's going to object because it's such a, trivial setup. It could be a double top. Who? Who can be a double top? Adobe? Indeed, if it fails, okay, if it fails, Gulam, it can be a double top. I agree. But you want to trade double tops on weak stocks because double tops are signals for moves lower, and you want to trade lower weak stocks. This is a strong stock on the daily chart. We already seen this one. It gaps up like 4 or 5%. And you should not be looking for the weakness in this one. The daily is amazingly strong. The intraday also strong, and now you have a cup and handle formation breakout over the highs of the day. So I would say indeed it can form a double bottom, a double top, which is a short signal. Okay, but this is a strong stock. On strong stock, you don't look for short signals. You look for long signals. You look for reversals to buy cheap. Okay, you don't want to sell expensive. Although it's always a big deal to sell expensive. You want to sell expensive a weak stock, not to sell expensive a strong stock. That's pretty much the concept here. Okay, guys, this is how we look at 12:30. We managed to stay and trade a successful breakout at pretty much at 11:30. And the stock is again coming back and retesting the breakout level, and then legging up and making another sideways move. So what do we have here? First of all, the reversal trade, as you can see it, um, if anybody bought the reversal trade as opposed to the breakout trade, you know that the view of reversal trade in this case was the money trade versus the breakout trade, which again is not proving at this point to be really a money maker. So again, the idea here on this Adobe gap up and go, you can try and should try to trade the breakout, but if you are a better trader than that, meaning you can spot reversal entries, this is your best bet. Okay. Sometimes the breakout is not gonna be a big breakout, but a reversal, which leads to a leg, a strong leg up to the highs of the day, and then the breakout are enough for a big partial. Now the reversal, there was no really reversal forming because the reversal formed in the morning, but on the second pullback to the VWAP area, it was a bit messy. In retrospect, it's not very easy to see the hammer reversal here, okay? And it's not easy to see the VWAP reversal. I would have to say that you have to have a very good eye for this reversal trade. No. The reversal is always with the trend. The reversal is not counter trend. Okay, so it's a pullback from the highs towards the breakout. That's how we call it. It's not a reversal. A reversal is a trade that a strong stock after a pullback reverses higher again with the trend. So reversals are with the trend. Pullbacks, of course, are counter trend. Hope this is clear because it's a very simple terminology after all. And again, if we have the discussion points here, is it a gap up and go? Of course it is. Do we have to deal with the stock direction? No, it's higher. Trend is higher, period. Okay? We are over the highs of the day. The trend cannot be anything other than higher. New entry points? There aren't that many new entry points at this point. Okay? And the risk, of course, pretty much to the VWAP area. Do you know any profitable trader of counter trend trading? Obviously, there are, but I don't see the logic behind it. I don't see the logic behind shorting the strongest stocks instead of joining the strongest stocks. You have today the easiest example. Okay, today anybody that tried to short anything at the highs of the day got smashed. The only thing that you could have made money on is shorting a weak stock at the highs of the day. But that's not a problem most of the time. The idea here, and again, try to figure out the easiest trades. And the easiest trades are going long when the market is moving up and going short when the market is moving down. Okay, that's the easiest thing and most trivial thing to do. It's really complicated. Many traders that do it have a system. If you don't have a system and you're looking to short a Tesla today, you don't have a system, you don't have an account already today. Okay, so you try to short Apple today at the height of the day, or Facebook at the height of the day. So if you have a system and it works, I don't see the logic. Okay, so if you are such a good trader, move to the easiest strategies, make more money there versus this type of strategy. Having said that, it's a game where it's your own money. You do whatever you feel comfortable with it. So if you can find the reversal trades at the highs, even on strong stock, they will work. But you, in this case, will need the market. And today, Charbel, the market was impossible. The market was higher all day. So did I find them? I couldn't find the long trades when I traded. Then I took a break, and when I came back, it was all over. Yeah, the SPY was amazing today. Really, really, really amazing. Up after opening your negative, up 0.9, 0.83, up 0.83%. Emma, welcome to our trading room. Do come back. We are in a session right now, but the trading day is over. Do come back tomorrow morning at 8:45 US time for a presentation for new traders. 8:45 in the morning, every morning, presentation for new traders. Welcome. See you tomorrow morning. Clear, guys? About Adobe at this point. Now let's see the question and analysis 3 hours into the trading day. Which of the following statements is true? The trend is clear, higher. Gap up and go plus cup and handle breakout at highs. The view of persistent reversal was successful. All of the above. Now let's see. The view of persistent reversal was successful. Was it? Yes, it was. Really, it was. So it's D again. Again, it's gap up and go. We're not moving lower. We're not moving higher, but definitely not moving lower. We're pulling back after each breakout, but the trend is higher. There's no question about that. The view of reversal, of course, worked. It was also a cup and handle breakout over the highs of the day, easy to see as well, and also a triangle breakout. So all the attributes for a bingo move, including some pickup in volume, were on the table for Adobe. Okay, now guys, one of the reasons that I posted this case is that there was something very, very unique July 19, sorry, July or June 19? It was June 19. July 19? My mistake, it's June 19, guys. So ignore the July 19, everything is okay, but it was June, okay? So this is how we look at 4:30 in the afternoon. One thing that we forgot to address, and this is very important because we're going to have this month the FOMC meeting, okay? So those who are here this today, remember the FOMC meeting and the volatility that's accompanied or accompanying the FOMC meeting is now priced in the Adobe game plan. So do we know how the market is going to react after the FOMC meeting? And we are in Adobe heading into the news. Now, are you are you in the stock into the news? And if so, why? Okay, I'm going to tell you my side of the story. Okay, I'm never taking a loser or a stock that's not a big winner into news. In this case, Adobe, of course, is not a winner into news. It becomes, in retrospect, a winner after the news. But let's face it, into the news, it's trading below the highs of the day. So why would you be, exposing yourself to losers and volatility that sometimes you cannot control when you are also losing money? So if you look at the price action exactly at 2 p.m., okay, of course the volume is picking up on the FOMC meeting release, but the idea here that you should not be in the trade anymore. Of course, you're going to miss the leg up into the close as well, but that's part of the game right now. Meaning you trade them extreme volatility, and you're not doing it while you are in the money. So you have a very reasonable scenario where you're going to lose money on ADB. And this is how the trading day ends. So the price action is great all day. Then we break over the highs of the day, but we fail. We move lower towards the breakout level. And then the news, the FOMC meeting news are coming out, and suddenly it's a different market, a different stock, very strong, and it closes at the highs of the day. Now, again, Mohammed, if you're heading into news with the open position, but it is a big winner and you are after the partial, so be it. Going into news can lead you to more money, okay? Because if you are long, a gap up on the new good news and you're looking great. But if you have a loser, it's not fun anymore because indeed a move higher will save your positions, but there's going to be uncontrolled volatility, and you don't know if on the news the move is going to be lower. Best not don't take any chance. If you can take a chance with somebody else's money, that's the best. Okay, you are in the money, a dollar or two, whatever. You took a partial on the position. The chances of losing money are zero because the stop loss is at the entry. So unless you have a huge steepage, you're good. Yes, in this example, yes, for sure. Yeah, the stock, if the entry point is the breakout, okay, or the entry point is the view up, you're out, even before the news. And what happens after the news is also wild. But you should not be in the news if you don't have a big winner into the news. No way you're going to carry a loser into the news because that loser can, which is maybe a small loser, can become a huge loser. Keep in mind that trading over news is always with slippage, risky, unclear. Um, the toughest trading environment. Let's face it. It's like a ship in a storm. Okay, you want to navigate a ship in the storm, or you want to navigate with good headwinds or backwinds, whatever it's good for the ship. I don't know. Maybe the backwinds or the headwinds or the whatever. Okay, that's the pretty much the whole difference. Okay, so we analyze the trading day for ADB, which, like I said, is a um, theoretical case. Very simple, but trust me, you're going to see at least 5 to 10% of the cases that report earnings, strong earnings, acting like this. Strong earnings, a gap up that's not really a strong one, and you try to squeeze some partials, and sometimes the gap up and go is a huge winner. This is not the case. Okay. So looking back at Adobe's trading day, which of the following statements represents the stock best? A, clear trend to the upside all day. Fed news volatility at 2 p.m. Increased the risk substantially. Capital breakout at high was with a good risk reward. Gap up and go successful. Again, it's a very simple case where the gap up and go was clear all day. The cup and handle breakout at highest worked, but it didn't work enough, or it didn't work big enough to take a big partial, and the reversal was a brutal one. So it was maybe a successful cup and handle position, maybe good for a partial, okay? But it wasn't a winning trade. What is a winning trade? Continuation until 4 p.m. Yeah, but you have also the capital breakout at highs. Maybe it wasn't a big success, but the issue here was a good risk reward, not a big success. And again, what is good risk reward? Okay, keep in mind this is a $280 or $290 stock. If the risk on the trade is to the view up, meaning $1, and this is 1% move in Adobe is $3. That makes it already a 3-to-1. What is a 1% move in a stock like Adobe? It's not a big deal. So I think B is also qualifies. I would agree that A and C are perfect in this case. Okay. Okay, this is the day after, of course, the date wasn't July 19, it was June 19. My mistake, I will need to fix the date on the chart. I think it was because yesterday was July 19, and I was thinking July was on my mind and posted that date. Anyway, it was June 19. And this is how the stock trades the day after. Okay. Immediately from the open, it trades higher, sideways for about 3 hours, and then after the lunch session, breaks the reversal. Okay, at um, well, using also the VWAP, you can see the consolidation under the VWAP, and closes at the highs of the day. So, how many trade ideas were okay for Adobe June 20th? Assuming you're not buying it in the first 10 minutes, only one. Under the view up, it looks maybe looking lower, but that consolidation between the resistance and the view up is the money trade, and the close amazing. So that's again, that's why you need to analyze also the daily chart to figure out if you have a winner, a loser, or a stock that's just moving sideways. If you have a winner, of course the chances of a move higher increase. If you have a loser, the chances of a leg down increase as well. If you have nothing, it can go both ways. It's actually maybe the best thing into the gap up and go, because when the stock trades sideways for months in a row, it will gather some more momentum actually on earnings day. But you can see the second day in Apple was up. However, it was very hard, I don't want to say impossible to trade, other than one trade. So This is Adobe pre-earnings, a gap up and go on earnings. And it closes at the highs of the day, eventually, okay? After the FOMC meeting. And this was the volume on the FOMC meeting. You can see it clearly on the chart. And then another gap up. And then the entry here at the um, orange resistance level. And the 4-day, then the trade pretty much unravels. But the idea here is not to swing Adobe, okay? The idea here is to see how important it is to buy strength. And if you can be in a trade, so be it. But strength is very, very important. And strength on the daily is super important because what is the strength on the daily? Millions of traders, millions of shares are supporting the price. Um, so that's a trend that should be trusted, and the trend is higher for now 5.5 years. Actually, 215, almost the mid 219, yeah, 4.5 years. Now, the summary is Adobe a stock that we follow into the trading day. We used to follow it in the past. I remember Scott trading it many, many times in the past. We don't follow Adobe anymore into the trading room because we have so many other better opportunities. But we will probably follow it on earnings day. That's the only day right now that fits that Adobe pretty much fits the criteria of being traded in our trading room. It was traded in the past. Maybe will be traded in the future. Right now, I don't see basically any reason other than a big gap up on earnings to spend time watching and trading Adobe. We're going to take a look in a split second on the intraday chart today. So why do we want to trade Adobe? First of all, it's an institutional type of trading. You can see that uh, insiders are holding 0% of the shares, 1%, and thousands of institutions, 1,948, 46 institutions are holding 90% of the shares. So this is, a game for institutions. Their game plan is long term. We like to trade it, and on a given day we will go back and trade Adobe as well, again as well. Okay, guys, done with Adobe case. Let's take a look for a split second on the hold on Adobe since the coronavirus hit. Wow, look at Adobe today. Are you kidding me? I didn't know it's such a big, continues to be a big mover. Actually, one of the best trading days in months for Adobe today. Exactly like the SPY, This 447 or 448 reversal trade. The volume is not amazing, but the trend today was unbelievable. I think there was one good trade, this reversal trade, 447.50 or 60. And that was pretty much it. Guys, look at the daily chart. It is still an amazingly strong stock. Look at this one. Look at Willow. Look at I don't know if they are the same sector. Probably they're not. But FSLY, Twilio, Adobe, very, very strong. Yeah. I think this was, a much better mover than Apple. Yeah, a much better mover than Apple. But the volume is not even close. This one traded 3.5 million shares per day. Today, Apple traded 6 times as much, almost 10 times as much. So, okay, guys, questions? Again, what you need to understand and learn from this analysis is that it's important to trade strong stocks on any time frame. This is quite the case for ADB. Sometimes things are going to work. Sometimes things are not going to work. But you're not going to fight the volatility of the FOMC meeting. And this is something that happens only 8 times a year intraday. Should not happen and should not interfere with none of our trades eventually. Okay, guys, our second case is a small cap Malink Rod, symbol MNK. A very, very simple case. I will start the first part of it. We will go for another 10, 15 minutes, and we'll continue with this case tomorrow. Again, we have today an hour and 30 minutes, tomorrow another 1 hour and 30 minutes. We're going to cover this case and another case, which will be, of course, more aggressive versus Adobe, which was a really easy case with trivial questions, just to get you on board with the cases. Remember what we said about the Adobe? Strength, a strong, amazing daily chart, strong on any time frame. Many ETFs are using it. And now we're talking about this stock. 3.4 million shares are in ETFs. Sorry, 34 ETFs are holding. Yeah, this one is totally the opposite. 5.4 million shares are in ETFs. 34 ETFs are holding it. You know already what's coming. When only 5.4 million shares are in ETFs, and this is not an IPO, you know that something bad is coming. Okay, so this is the face of MNK. In 5 years, with the market moving up 25%, the stock moves down how much? 1,000%. It can't be 1,000, but 99. Let's almost 99%. So this is a disaster. Okay, so this is basically a stock that is either going through bankruptcy or some very bad stuff. And indeed, MNK was one of the, let's put it this way, one of the pharmaceutical companies that sold generics for opioids. So that money that you see 5 years ago was made selling opioids, and with that business unraveled, and their ability to sell this hugely profitable drug not available to them, and probably also being sued left and right. This is what happens. So this is again looking at the daily chart. It's let's call it I don't know how Meir calls them falling knife. You want to call it a falling knife? You can call it. You want to call it bankruptcy going to zero? You can call it any description won't be as much as embarrassing as this chart. The chart is embodies the embarrassment of the owners, if there are any owners in this company. In 5 years, the stock is down 99% or 98%. And again, if you on any time frame that you want to look, it's lower. Everybody's all the investors and institutional investors are bailing out, and once the stock hits $10 and breaks, there are also some institutions that are no longer holding the position because they're not allowed to trade or own, by definition, stocks under $10. They bail out, and the response here is almost a move to zero. Another 95% leg down, 96% down, leg down in the last year. So this is how it looks, guys. The stock trades down to all-time lows 143 and suddenly pops up, pulls back to the $2 support, pops up, pulls back to the $2.7 support, pops up. And this is how it trades. I mean, probably as soon as it hits 150, there are some buyers or how we used to call them and calling them bottom fishers, okay? Which is a very, very risky practice because what is bottom fishing? You're going for the worst type of fish, those the ones that are poisonous, filled with mercury, those who eat the garbage at the bottom of the sea. Now, who's going to buy MNK? Who's desperate enough to buy MNK? And why buy MNK if you can buy the Qs, Apple, Tesla, Facebook? Why would you spend even $1 buying MNK? So again, can anybody explain why is anybody buying or owing still MNK? Now, shorts are not covering, Mohammed, shorts are not covering at the lows of the day, at the lows of the year. Shorts are covering at the highs of the year, like Tesla. Okay? But, there is look at the moves here. Okay? Percentage wise, if you want to make a huge percentage type of a move on very, very little time with very little money, this can be a strategy. It's like a, Las Vegas type of strategy. Okay, you have little money, you go for a high risk play, and you draw the dice, and sometimes there is a response. Now, is it going to pop up long term? Who knows? Probably not. Okay, probably not. But who's to tell? I mean, maybe they're let's say they were smart and they changed their business model from whatever they were doing to research for viruses. And now, you know what happens now? Okay, obviously this is not not possible because this is a different type of company. This is a company where they used to take advantage of the market, especially in the US. They were like I don't want to say a scheme, but that was pretty much their business. There was a movie in Netflix about this type of companies where they were, selling opioids, buying small companies, and jacking up the price of the stock of the drug. Horrible price, horrible practice. But as long as they made money, everybody on Wall Street was in the business. Everybody in Wall Street was in the business of making money. As soon as um, this crooked practice unraveled, guess what? Nobody likes MNK anymore. Of course, nobody likes to hear about the FDA raiding the company, their offices, stuff like that. Anyway, so why would anybody buy MNK? This is, bottom fishing. You can fish. Why are some fishermen using this practice of finding, the most poisonous fish at the bottom of the sea and eating them? I don't know, but maybe they can make money out of it. So if you cannot, if you cannot fish for tuna, and you can't fish for profitable other type of fish, and your business is bottom fishing, okay, this is your business, and you can still eat fairly well. I'm guessing. Uh, I mean, this is what it is, Um, so can we participate in this game, or do we want to participate in this game? This is a very high risk, but very very energetic game. Okay, look at the price section, guys. So let's take a break now. We meet tomorrow, guys. We're going to analyze this case, but take a look at if you have the time. Now it's late, but if you have time tomorrow, take a look at the MNK on the daily chart. What happened since the beginning of this year? Because the trading day of this stock is January 14. Okay, what happened since? We're going to talk about it tomorrow at 4:05. Okay, so this is actually a very interesting case where the market is loaded with these type of patterns. Thousands of stocks are awaiting a savior, okay, or news that will save them from oblivion. Let's call it. Okay, guys, we're good. Tomorrow, 4:05, we continue with this trade. Like I said, if you have the time, observe the daily on MNK until today, and we continue with analyzing this case tomorrow. Have a good night, everybody. Thanks for being here. The session is being recorded by Clifton. If you need the recordings, you know how to reach Clifton. Guys, if anybody again has a question for me, you have my email. It's michael.o@tradenet.com. And have a good night. See you guys tomorrow.